Welcome to Stephen Johnson Stocks. This one's with Tim Sykes.
Welcome everybody. Keep up the good work, and we just figured out his problem. Unbelievable. It's all up here in this cranium. We're gonna fix it. We're gonna fix it. We're gonna make him right in the head.
Gonna be right in the head.
Done.
Right.
Boom.
And we also have Roland here.
What's up, guys?
Roland, let's I'll just hold it because I think it's easier.
No, that works.
Tell us about you, because you're on SCT Pro. That's where I met you.
Yeah.
And how's your trading journey been?
Trading's been good so far. Last couple months, been averaging about 30 to 40K the last couple months, and it's been good. Up to 133 in profits now.
133,000.
Yeah, 133,000. That's right. Yeah, Tim was telling us we need to give the whole amount to give it the real effect.
All right, cool. And we're both at the Market Mastery in Italy. We can't exactly say just where, but it's been cool for networking and meeting different people. And what were the main things that we were talking about? Because I was chatting a little bit about breakout buys, especially.
Yeah.
Go on, say a little bit more, because you said something really interesting about the breakout buys, about getting in and chasing, and this was your main problem.
Yeah, I was buying in anticipation of breakouts. That was a big problem I had, trying to get that extra 10, 15 cents maybe. And then you get to the breakout level and you're coming up to the big shorts who are short and big there, and the smart buyers who are actually selling. So you end up running into a brick wall and it just drops. And a lot of times it would, stop you out, only for it to then rip back up once you've been stopped out. So rather than buying in anticipation of breakouts, I usually will just buy after the breakout. And after I get a confirmed breakout, come back down and test that breakout level. And then I feel much better about going in on the trade, which has been really helpful.
Yeah, because you've got a better entry point.
Yeah,
and
absolutely.
That was the main takeaway I got from working with Roland. And then I've just learned some major things with Tim. I'm down about 80 bucks on the entire month, expecting a green month, providing I stick to the rules that I've just discussed with Tim now, and it should be onwards is upwards. And I'll get into it and I'll show you guys the trades now in me little Excel. And meanwhile, me and Roland will think about something funny to do for the close.
There you go.
So keep watching. The affiliate links below if you want to join Tim's course. Dreams do come true. He's proof of it. He's kind of living proof of it.
It's working. It's working.
And one day I will be too.
Yeah, definitely.
I'll see you later. You can do it too. I'll see you. No, I don't know. You don't have to. Okay. Well, guys, I've actually deleted my Excel by accident, but by June it was 15 trades, 1.5, 33.3% average, and mostly, I mean, when we go back through Profitly, I'm just doing this on the fly actually, but we can see that the profits came from shorting the overextended stocks and buying the first green day. So NAKD was the first green day. dfiexV was shorting an overextended stock. Which gapped up 30+%. CAMT was a multi-day swing, very short. HUSA was very small short, and the rest were. NBEV was chasing a short down. CAMT was the first green day that didn't work, but 60% of the time they do, I cut it quick. I'm not too worried about that. But yeah, and scrolling through, you can see that most of the losses came from not sticking to the patterns. And I was just actually chatting to Tim Sykes about that in Market Mastery just before. And he was saying just stick to the two patterns that work and that you know. And this is what I really need to do. And this is why he comes down on us about discipline, which I'm sure you'll see in future Tim Sykes videos. This is a real embarrassment. SPWR, nice breakout on the 820 level. Ran, started top, and it kind of topped once, twice, 3 times. It had its first red day, not particularly overextended from the 7s to the 9s. I was in on this day. It was a really embarrassing short that I'm really disappointed about. And with the guys at Market Mastery and the challenge, with Roland again, and it's embarrassing for me to talk to him about it and show him it, because I'm like, yeah, I'm a good trader, and then I show him this and I'm like, I'm a fucking gambler. But yeah, so I'll just quickly go over it, and then Roland maybe is better at telling you the right way to do it. We've discussed it already, but I was chasing down in the 920s. It was cracking all the way down. I thought, I've got to get a piece of this move like a degenerate gambler, and then it popped back up and ran. And maybe Roland will tell you the better way to play it. We'll start you on the daily.
Yeah, I mean, personally, this isn't one of my plays. just the price range and it's not too overextended. It didn't make any really crazy moves. There's that red day in between right there in the 9s. So it wasn't like 3 big green days necessarily that would give you a good indication of overextension. It's kind of in consolidation right there.
To break out for another leg up. Even.
Yeah, necessarily. Yeah, possibly.
Yeah, and then on the intraday.
And then on the intraday, it's a chase. Once it cracked in the morning and came straight down from where your entry, it's basically a chase. You're shorting into weakness.
Yeah.
As opposed to shorting the strength or getting in nice and early in the morning. So it's a chase down. You're chasing it down, and then it grinded up all day.
Yeah, but we were saying a nice short might have been. We just zoom out a little bit. The better short might have been this failure to break the high of day.
Absolutely. But then you get a little head and shoulders in there, and then it cracked down. But even then, I mean, the reward there is only 20 cents max.
Yeah. So, the stock's not really volatile at all.
Right.
And
that's one of the big problems is it's not volatile.
And maybe just for fun, what was the stock that you took profits on, just to show the comparison in volatility?
Which one?
DCTH maybe?
DCTH, obviously, yeah, it's very volatile.
Just to show the difference, so we had 20 cents there on a $10 stock, which is what, 2%?
Yeah,
2%. 2%, and that was the full move. If you captured from the top to the bottom. Let's look at DCTH. I mean, what was the main day you were trading this?
I traded it several days. I started in at 2 cents. 0.027 was my first entry.
So that's we'll just go over 10 days.
Yeah.
Maybe you can spot one of these moves.
Sure.
We're in Italy and the Wi-Fi is not 100%. So loading 10 days of 1 minute candles is going to take a bit longer.
Want to play around a little bit?
Yeah.
Cool. Let's do it. I'm just going to grab my camera.
Okay. So you're in it from 7?
I was in from 2.
From 2.
From,
okay, so
yeah, 0.027 initially.
So you were buying this, was it this breakout here on the first day?
Yeah.
So you were in very early.
I was in very early.
Let's have a quick look. So whereabouts did it have your interest in on this day? Don't tell us you're buying this panic.
I did buy that panic.
You bought that dip?
I bought that dip at 6. Literally, I think my entry was like 19, low 19s.
Insane. So you're buying off this support.
Yeah.
It's cracked massively, and then you can sell into this pop back up.
Yeah, exactly. Which I did. I actually sold right into the initial pop right there, and then which worked out really nicely. Obviously, then it started to grind back up after hours, and
so you held some.
I didn't. I was all out. Yeah. When I'm dip buying, generally I'm not holding too long.
But I mean, these scary pre-market moves from 31 to 27, they're insane.
Yeah, I wasn't messing with it pre-market, and I didn't mess with it too much after that day right there.
So how are you catching the bottom here? Because you could have been trying to maybe buy it off. Now this is not enough consolidation.
No.
For you. It has to be around here where it's like 30 minutes of consolidation.
And actually, I was
through it a bit, no?
Yeah, and I was looking at the support a bit, but mostly I was just looking at the price action.
Yeah, and if we look at this move, we've got from 17 cents up to 24. I don't know how good you are at maths.
But I was out. I think I sold a chunk at 21 and then another chunk at 23.
Very nice. Can we do maths? Anyone? It's 5 cents on 25 cents it's 20%. No, yeah. It's 20. I think 20%. Write in the comments if we're wrong. Okay, and that's too much. You've had too much. Normally it's just me. Now you've got a real expert. So I'll leave it there.
Not quite, but
we're getting there.
Yeah.
You guys are being tread too much. I'll see you later. Okay, so this was the SKLN trade, and normally with this, I've monitored and checked back on data, and when stocks got up 20, 30, 40%, especially with a reputation like SKLN, especially when they've failed big in the past, these are the types of stocks that I like to short, and being a little bit silly, being a little bit impulsive, I took a loss on this one because I switched bias, which I never should have done when 60 to 70% of the data that I have shows that they do actually drop. But I acted impulsively, and I actually got in on this push when it was breaking kind of to new highs, but it wasn't breaking high of day. And I bought in here, it slammed back, and because I was chasing a little bit, I had a terrible entry. And as soon as it slammed back, I was I was down 10%, and I mean, it was a real amateur trade. We've got Roland here as well. I don't know if Roland has any perspective on it or any advice.
Yeah, I mean, like we were just kind of talking about, you know, a better entry would have been, if you're going to go long, would have obviously been on the dip, or even better would be a break of high a day, which would be the break of that pre-market high of day. Then you would have possibly gotten a squeeze there.
But you not think with the break of the pre-market high of day, even then it's a bit of a bad entry.
Yeah, absolutely. And I think when you look, just like you said, when you're looking back at the history of SKLN, especially in recent times, it hasn't been running. So it's obviously a lot of shorts were involved here and like to short this stock because there gaps up and then it dumps.
Yeah, and if you were going to buy the bounce, where exactly are you thinking? Is it this first red candle here, or?
Actually, in retrospect, I probably wouldn't have bought the bounce
You're
either
just
way.
not going to buy the bounce either?
No, absolutely not.
Just because of the stock's long-term history?
Yes.
I'll c'est la vie, say no more. That is the lesson. Okay, and that's a close. That's a close. So I'll leave you guys with this insane view of Market Mastery. Check it out. Gotta remember, live the dream. We will not fail. Keep on working. Stick to 1 or 2, 3 patterns that work for you. Don't trade anything else. This is what I learned from his one-to-one with Tim today. And boom. It's better than me balcony view. But I'm not going to scream off this one. I'll see you all later.